Valens Research, Uniform Financial Analytics.
Moderna, of course, makes the COVID vaccine, and their big focus is on research around mRNA, hence the ticker. And the really interesting thing that jumps out to us when we look at Moderna is one, and this is wild, look at how as-reported metrics misrepresent this company's profitability. If you looked at as-reported metrics, you would say, wait a second, even in 2020, when this company had governments around the world throwing money at it for making vaccines, it wasn't making a positive return. It was still losing money. Well, that is a concerning signal. In reality, though, what we can see is uniform return on assets actually flipped positive in 2020. And this company had actually made money historically. This is a better business than as-reported metrics reflect. But the other thing that we can see, which is really important, is on an as-reported basis, you think, sure, this company hasn't been profitable, but it's inflecting to profitability, and it's only trading at a 10 times multiple. Well, in reality, it's not only trading at a 10 times multiple. Moderna is trading at a 23 times multiple. So what Moderna is trading at right now is as though the market is forecasting that these super high returns the company has are actually sustainable, and it's going to continue to profit like it has from the COVID vaccine, or it's going to be able to have other products come out quickly to replace the revenue that it's getting from the COVID vaccine. And if we ask ourselves, right, we can see returns are already profitable. One, we wouldn't even realize that if you use as-reported metrics. But two, now when we think about the fact that it's actually not trading at half market average valuations, it's not a high growth biotech company that is trading cheap. It is a high growth, high opportunity company that the market is pricing like it is going to have ROA resiliency. All of a sudden, this is a different question and equation that we're talking about. We're not talking about, do we think that that Moderna can just turn positive in terms of its returns and then just basically keep what it currently has, and then it's really cheap because, right, it's trading at half times market average valuations. We now need to believe it's going to have peak return on assets sustained going forward, and it's going to be able to grow to be able to buy into this. That is a lofty ask in a completely different perspective than we have otherwise. Now, far be it from me to say that Moderna can do this. You know, if you look at it, this company is forecast for return on assets to be 20% next year. I mean, for the next 5 years, with only 12% growth, and the company has grown a lot more than that. It's possible that Moderna could do this. I don't think that this is probably an unreasonable scenario for Moderna, but right, it's not the scenario that we would see for Moderna if this company was trading at a 10 times multiple, which would say Moderna didn't even need to do that, didn't even need to have returns like it had last year. It had to have returns half of what it was last year, or even less. These are the kind of situations and the kind of scenarios that all of a sudden we're having a different conversation here, and a better conversation, and a more thoughtful conversation faster, because we're using the uniform accounting metrics to see the reality of this company, right? And just for context, if I thought this company was going to keep on growing at 30% a year, which would have grew every year other than 2021, well, then ROA needs to be flat here. That's a thing that I could see happening, possibly. Wouldn't even know that it was already a profitable business to be able to put in that scenario if I was looking at as-reported metrics.
Valens Research, the world's leading source for uniform financial analytics.